crossing moments ago, the final read for the first quarter GDP down a worse than expected 1.6%. Joining us right now to react is Kudlow host Larry Kudlow. Larry, great to see you. Thanks very much. This was worse than a lot of people expected. We were looking for 1.5%. It's down 1.6%. Larry, do you think we're in a recession right now?
Well, look, I wouldn't make the call based on, this tiny revision, 0.1%. But if you look at the GDP tracker from the Atlanta Fed, now that's through May. So they're saying 0.3%, call it flat. So the first half of the year, could be flat, could be slightly negative, whatever. I think because of the inflation problem and the collapse in consumer confidence problem, and the Fed is going to be raising rates significantly more than they have already. So I would just say, Maria, we're probably on the front end of a recession. I don't know that we're actually in one just yet, but the outlook is not good. The outlook is not good. And this is, with self-inflicted problems from the Biden administration, particularly on overregulation of the energy sector. But there's a lot of blame to go around. There's too much spending. There's too much regulating of business. The Federal Reserve was way, way behind the curve. They're going to have to catch up. It's not a great outlook. And I think inflation is going to be very sticky. I think someone told me, one of your producers said the core inflation rate from this GDP report was 5.2%. I think that's going to be very sticky. I think the core inflation rate coming up is going to be closer to 6%. And so look at this. Interest rates should be above, right? Nominal rates should be above the inflation rate.
Yeah.
So if you get to like 6 or 7% target rate, that's going to be a big problem for the economy. And the Fed's not going to get any help from better. There's no supply side fiscal policy.
No.
So it's not a good outlook.
In fact, they're still talking about getting more spending through. You know that Chuck Schumer wants a reconciliation package that includes increases in taxes up to $1.5 trillion of tax increases. But Larry, I want to get your take on what the rest of the year looks like, because last week we got the very prestigious University of Michigan Consumer Sentiment Index out. It was down 14.4%. This from May to June, it was at 50. The figure is the index's lowest reading since 1952. So you look at a consumer that had money, had good savings, now started to cut into those savings because of the level of inflation. You just said a minute ago that the Federal Reserve is going to be raising interest rates. There's an increasing view that the Fed's going to have to be stopped because the markets are going to be so volatile.
Well, look, on your point, I think Michigan collapse, the Michigan consumer sentiment. Also, Maria, as you know, the Conference Board consumer sentiment was very, very poor. And I think one of the key points here, you've got explosive energy prices, gasoline and so forth and diesel. You've also got explosive food prices. The grocery store is very bad. And at the same time, wages are rising about 6%. But the real wage number has fallen by 3 percentage points over the past 12 months.
Right.
So you've got, grocery and energy and housing stuff, all that's rising, but the inflation rate is rising faster. So you've got also a wage price spiral. This is going to force the Fed into a very, very, very tough position. You heard John Williams, I think it was yesterday, from the New York Fed.
Yep.
He's saying the target rate's got to be above the inflation rate. So I think it's a difficult story. Look, if they were smart, which they are not, they're big government socialists. Okay, so they're not going to help out. But what they should be doing is making the Trump tax cuts permanent. They should be deregulating the energy sector and allowing drilling and allowing pipelines and allowing refining. And they should be deregulating all of business. And they won't do that. So the supply side of the economy has been stifled, and the Fed's going to have to slam down the demand side. You got a problem. I can't get around it. I'd like to be. Look, I want to restore life, liberty, and the pursuit of happiness.
Yes.
Okay, that's our theme.
And you've got a special
there's no life, liberty,
today.
and the pursuit of happiness right now.
You've got a special on that today, 4 p.m. A new special, Kudlow, Restoring Life, Liberty, and the Pursuit of Happiness, that talks about how bad things have gotten under President Biden's leadership. So where is life, liberty, and the pursuit of happiness then?
Well, I think it's coming. I mean, I think the cavalry's coming. It's like the Declaration of Independence. The voters are going to have a peaceful separation from the present government. Voters are going to remove their consent of this government, which is essentially, as I said, big government socialism. And there's going to be a rout coming in November, and you're going to see a complete change in at least the Congress. They can't change the White House. But I'm drawing from the Declaration, in order to achieve life, liberty, and the pursuit of happiness, there's going to be a great separation, Maria, not from you, but from the Biden administration and Nancy Pelosi. I don't ever want to separate from you.
No. Real quick, here's Lou Bassanese. Go ahead.
Larry, just real quick, we've been debating recession or not. I think we all agree it's imminent, or we're in it right now. How long is it going to last, and does this rout in November that you're predicting have an impact on that?
Well, look at a new Congress, let's call it a capitalist Congress, can stop the bad stuff. Okay, they can stop taxing, they can stop the regulations, or at least they can't stop all the regulations. So it'll help. But I think the slump with high inflation and low growth or negative growth, I think we're in for, I don't know, 12 to 18 months, maybe as long as 2 years. It's going to be very difficult to dig out of this mess.
So a little bit
with
longer
spending
than average,
and taxing
15 months,
and high rates.
Well,
very difficult.
We're seeing it take place, certainly in the housing market, with 5+% mortgage rates, almost 6% mortgage rates. You're seeing real destruction there. The Fed slamming on the brakes. Larry, we'll be watching you today at 4 p.m. Eastern. Thank you so much. Kudlow's version of life, liberty, and the pursuit of happiness. We'll see you at 4. Larry, thank you.